Hi, good morning. Welcome to Kotak Securities weekly fundamental podcast. This is Rini Mehta. Indian stock markets saw some profit booking last week. Earlier last week, sensex achieved a new lifetime high. And if you see BSE Midcap and Smallcap indices declined by 0.5 to 1%. Most of the sectoral indices also witnessed negative returns last week. BSE Commodities, FMGC were down by 2 to 3%. BSE IT, on the other hand, was flat. FII flows were positive last week. Globally, if you see in the US, Fed chair reiterated his stance that more interest rate hikes may be needed to bring inflation below its target, though at a slower pace. Also, Bank of England hiked interest rates by 50 basis points to curb persistently high inflation. In India, the minutes of the June RBI MPC Monetary Policy Committee meeting, reflected the hawkish tone of the meeting. So far, the overall progress of the monsoon has been slow, and its movement over the coming weeks will be crucial. If we look at foreign investors' participation during this period, FIIs continued to be net buyers to the tune of rupees 6,888 crores so far in June. FPI flows in the month of June were mixed for emerging markets, except for India, Philippines and Taiwan. All other emerging countries witnessed an outflow. Now coming to the stock picks for the week, we like HDFC Life. We have a buy rating on the stock. We returned positive from our meeting with HDFC Life's management. We find the company investing aptly to grow lower ticket business and sustain growth in high margin retail term. It seems firmly on track to deliver mid-teen APE growth for the year, that is annual premium equivalent. So we retain buy on the stock with fair value of rupees 820. Lastly, our pick of the week is Pharma. We have a buy rating on the stock with fair value or target of rupees 1,150. Our investor interactions over the past 2 weeks suggest most believe Sun Pharma's FY24 sales guidance of high single-digit growth is conservative. While assessing reasons behind its seemingly conservative top-line guidance, we review its guidance versus delivery track record over the past decade and highlight why there is an upside risk to its FY24 sales growth guidance. Despite elevated R&D, we build in 200 basis points EBITDA margin expansion over FY23 to 26, led by improving profitability in specialty and better domestic productivity. So we are positive on the stock. So guys, that's all for today. See you again next week. Thank you. Signing off.